Much for that, Arabile. Well, let's have a look at our number of the day. It is centered around consumers and how essentially it is going to be affecting consumers. Let's have a look at it. There we have it, 5.1%. It's the consumer price index, and it has ticked up once again to 5.1% in July from 4.6% in June, above economists' expectations. Well, according to data from Stats South Africa, transport costs were the key contributive factors due to higher fuel prices that we've seen been increasing specifically drastically over the past 2 months or so. The CPI measures the rate at which price increases, and fuel prices have been steadily increasing since April this year due to a combination of higher global oil prices, higher fuel taxes and a weakening rand. On a monthly basis, inflation also rose 0.8% in July from 0.4% in June this year. A core inflation, which includes the price of food, non-alcoholic beverages, petrol and energy, also rose to 4.3% year on year from 4.2%. Well, this has also prompted government to investigate strategies aimed at cushioning consumers from the impact that they've been seeing. Of course, our reporter Diabo Seto has.
Rising transport costs were again the biggest driver of the jump. Transport inflation increased to 10% annually from 7.3% in June. In July, the price of petrol increased by 26 cents a litre for 93 octane, 23 cents for 95 octane fuel, while diesel was hiked by 26 cents per litre. Economist Laura Campbell says this will impact on consumers' disposable income further.
Consumers have had their disposable incomes eroded in recent months due to higher tax rates. We saw the 1 percentage point increase in the VAT rates in April. There's been higher fuel prices and inflation edging upwards. It's all playing a role in eroding disposable incomes.
This year that this index has accelerated to 5%, but it still remains within the Reserve Bank's target band of 3 to 6%. The Steel and Engineering Industries Federation of Southern Africa, SABC, says the rise in inflation doesn't bode well for businesses and the metals and engineering sector in particular.
It's really a cause of concern for us because the demand for most of the final products or the intermediate products from our sector is a derived demand. So in other words, it depends on consumer spending. So if you have a situation where there's an increase in inflation, it's going to constrict consumer spending and it's going to impact negatively on the demand for our products.
Campbell expects the Reserve Bank to keep interest rates on hold.
Businesses aren't able to pass on cost increases to consumers easily because demand remains weak in the domestic economy. So it is expected that in the short term they'll keep interest rates on hold. The risk factor is the rand. So if we see the rand trading at levels over around 14 rand 50 in coming months for a sustained period, then this will result in increasing inflation.
The bank held its 5th meeting in July. It warned there that it was ready to tighten policy despite the weak economy in response to rising rand-driven inflationary pressures. Diabo Seto, SABC News, Johannesburg.